All right, joining us in studio, our next guest, George Lorimer. Last time we visited him out at a brand new build-out of homes up in the North County area. Now we got him in studio to talk about the pulse of the real estate market. Help us understand what happened in 2015, some predictions for 2016, and also real estate as an investment. So George, good to have you on the show.
Good to be here.
So I've known George for quite some time, and you continue to do bigger and better things. It's tough to get you in the studio, but since we have you here, you just heard us talking a little bit about millennial buyers and first-time home buyers. But we also can focus on real estate as an investment and help people better understand how it's a home first, right? You're going to live there, you're going to build memories, community, all that stuff. My parents still live in the house I was raised in.
The easiest, quickest way to get ahead is to buy an owner-occupied property if you don't have a ton of down payment, 3.5% down, or for our veterans, 0 down. So that's the first step, and this would be the next step.
Okay, so let's talk about it. So real estate investing, you're helping a lot of people do this on the buy side. When they go to sell, the idea is to maximize the equity growth. You do a great job of that. One of the best marketers in the business. Talk to me about real estate investing.
So look at it this way, Craig. You know, we talk to people oftentimes, and it's tough to invest and flip real estate. The markets, it's really tough, and
it's even harder now than in the past.
It is. So you know, there's investment groups that do that specifically, do a great job, like we've talked about, renovating it. So this is more for the longer term investor that's looking for monthly cash flow year after year and equity appreciation. And so here's the thing we look at. A lot of times when I meet new investors, they just look at the cash on cash return. And we have pretty expensive homes here in San Diego County. The average detached home's around $674,000.
Okay.
The rents are high, but they're just break even. So if you just look at what the cash flow is, it doesn't look like a great investment, Craig. So they have to take a look at some different things. So we use an acronym that's really easy for people to keep in mind and remember. It's CASH in LA. So cash flow, income tax savings, loan buy down, and appreciation.
Okay.
You know, so those are 4 components of real estate. And, you know, I kind of went over it with you earlier, a quick example. And, you know, so let's say somebody buys a property, a home for $500,000. They put 20% down.
That's somewhere in the median price. If you're buying an investment property, you're probably not going to want to buy a $2 million pad.
Exactly.
Right? So $500,000, that seems to be in the San Diego wheelhouse as well as an investor's number.
Currently,
in the ballpark.
You're exactly right. The median price is $524,000 for a detached home in San Diego County. So just to use simple numbers, $500,000, 20% down is $100,000. Okay. A normal appreciation rate last year, properties went up about 9.3%. But let's just use a lower rate of 5% appreciation. So let's look at a 5-year horizon. You buy a place for $500,000, it goes up 5% a year for 5 years. The end of year 5, it'd be worth $638,000.
Compounding, right?
Yes.
So 525, that compounds. So, okay, 638.
So 638. Okay, in the meantime, you're paying off your loan, right?
Right.
And so you started a loan at $400,000, so you put $100 down. You have a loan of $400,000. At the end of that year 5, your loan would be $363,000. So you can see.
Yeah,
so
there's a gap. Now you got the equity.
Yeah, so there's 2 types of things, and people, it's a simple concept, but a lot of people don't get it. You've got the return of your investment, the $100,000 back, and then you got your return on investment.
So now you're going to go sell the house. So equity means nothing until you sell the house, right?
That's correct.
It's an imaginary number until you go to list the home, which obviously the goal is to get top dollar. A lot of marketing strategies to do that. But 1031 exchange, explain how you can snowball that into a bigger investment strategy and also protect from tax loss.
Right. So in our example, we have our return of investment, which is about $100,000. And then we have our return on investment, which is $175,000. So after you sell it in that scenario, you're making about $275,000 in your hand. And so of that, a lot of it's taxable, right, Craig?
Right.
So
it's going to be a big figure.
It's going to be a big figure. And normally, you know, what people look at, if you currently own an investment property, you probably want to get the best performing property so we can run an analysis of your property and see how it would compare to other investments. But let's talk about doing, you know, selling this property and not paying a ton of capital gains taxes and postponing them through a 1031 tax deferred exchange.
Now the 1031 is a line in the tax code.
Correct.
Right, so it's a strategy that real estate owners,
Right.
investors will use to reduce that liability.
Exactly.
Okay.
And so instead of cashing out, paying your capital gains rate, your state income tax rate, and then having a much smaller equity to put in the next place,
Right.
you do an exchange, it basically carries forward the gain into the new property. And you keep doing that, basically until you can do it no more.
So I know there's time frames, but you can
Yeah.
basically take, I want our audience to really understand
Right.
this. I mean, the best advice I'd give you is if you're looking to invest in real estate, George is a good guy to reach out to. But if you have equity in the home, you go to sell it, you don't want to get hit with the capital gains tax. So you can roll it into a like kind, or it's
Right.
got to be a bigger
Yeah.
home. So you
Yeah,
can't
so-
downgrade.
So let's back up. So first of all, you can't be living in it.
Right.
It's an
and that-
investment
right. It's
property.
got to be an investment property.
And by like kind, they don't mean a commercial property for a commercial property. They mean you're using it as investment. So as a rental property or income property.
So it could roll into another single family home.
Correct.
You could do a duplex, fourplex. You could even roll it into a commercial property.
Correct.
And now what's really unique is you can actually roll it into investments
That's
as
true.
well. There's
Yep.
strategies, Delaware statutory trust.
Right.
Different topic for a different day, but you don't even necessarily have to roll it into the
It's
actual
true.
real estate. You can roll it into the market and tie it to real estate, which is a really fascinating way to go about it if you do want to get away from property management and things like
Yeah,
that.
and on some of those investments, it's interesting because they've solved the problems that people have with income
Hey,
real estate.
so you get a little bit older,
Right.
you have all of these units. At some point in time, you're going to say, you know what? I don't want to have to deal with the property, but I still like the cash flow that property can give me. So it really does it gets pretty expansive on the things you can
Yeah.
do. You can stay in the real estate game, you can put it into the market, but the idea is leverage real estate,
Right.
build equity. 1031 allows you to reduce the tax liability.
Right, and so here's one thing. So on our example, where you had about $175,000 in gain, and you had about $100,000 payback, your ROI is almost 12%. It's 11.83% internal rate of return, and that's considering a couple of the components. But we still didn't look at your income tax benefits because it's specific to the person. So that's a really big thing.
Exactly. And we're not CPAs, but we can give you advice on all this stuff. We have introductions we can make on Delaware Statutory Trust, financial advisors, CPAs, obviously a great realtor like George Lorimer. If you visit me online at craigsewing.com, we can help you formulate a plan. That's great advice going into the end of the year, right? If this is something you want to look into in 2016, get your tax plan, real estate plan in place. It isn't just one dimension. You have to give it a helicopter view. George, great information today. Appreciate you coming in here.
Thank you, Craig.
All right, when we come back, we are going to dive into vacation rentals. We're going to go up to North County, and we're going to bring in much more market advice. You're watching The American Dream. Back in a moment.